So, on behalf of the New York Mortgage Bankers Association, our president this year, Sherry Eccles, our executive director, Joe Culver, our entire board, and affordable housing chairs, Sherry again, and myself, Bryan Garris, I thank you for joining today's webinar with our partners at Loan Depot. Before we get started, just a few housekeeping notes. If you experience any technical difficulties, that chat box is always there. Notify us and we'll do our best to fix or help you resolve it. During today's webinar, all lines are muted except for the presenter. And we're going to have an opportunity to ask some questions. Use that chat box, ask those questions, we'll compile them, and we'll address them as many as we can during the Q&A session at the end. We'll be sharing the presentation and relevant resources with you after the webinar. Obviously, as I mentioned, we are recording this. We'll have this up on our YouTube channel for viewing later. And I have to encourage you, because it's just the right thing to do. Join the Mortgage Action Alliance. Check it out. Google it, Mortgage Action Alliance. It's easy, it's free. It's a great way to stay informed on legislative issues that impact the way you do business and the whole real estate ecosystem, in fact. So hang in with that. So with us today, we have Bryan Bergjan. And Bryan, did I say your name correct?
Close enough.
I'm sorry.
No.
So Bryan is the National Director of Military Growth and Strategy with Loan Depot. Also on the line, we have Jeff Wilkish. He's the Regional Vice President at Loan Depot, overseeing New England, and he's co-regional in New York State. Jeff's a mortgage executive with over 25 years of building and leading top-performing teams, who is passionate about homeownership and education. So with that, I'm going to turn it over to Jeff. Jeff's going to give a proper introduction to Bryan, and excited to get started with the presentation. Thanks.
Well, thanks, Bryan and Sherry. As those of you who have heard me on calls before know, that I am super passionate about home ownership and affordability in this country. And being the month that it is, falling on Veterans Day this month, it's especially excited to introduce Bryan to this call. Bryan leads, as you said, Loan Depot's national military strategy. He oversees the development of our best-in-class VA lending platform. It's built on his expertise, outreach, education. Bryan has nearly 20 years of leadership experience across our industry and in the U.S. Navy. Bryan is also the national instructor of NAR's Military Relocation Professional designation and develops continuing education courses for all of our real estate professionals. He's the creator and host of Homeownership Heroes and Military Spouse Mondays, which are both education platforms as well. His extensive Navy career includes global leadership roles across Bahrain, Naples, Singapore, and Afghanistan. Bryan's work has also been featured in Housing Wire and National Mortgage Professional, among others. So not only does Bryan bring the mortgage expertise in understanding how to explain this to our realtor partners and why they really need to take our veterans offers seriously, but he also walks the walk. I mean, he's lived it in their shoes. So he has a unique perspective, and I think you're going to find a lot of value today. No one that I've met in my 25 years is more passionate about this space than the guy you're about to hear from. So with that, I'm going to turn it over to Bryan. And thanks, Bryan. I really appreciate you taking time. I know you travel all over the country helping us, and I appreciate you taking the time today with the team and with the New York Mortgage Bankers, because I know they're going to get some value out of it.
Absolutely. Well, I appreciate the invite. Thank you for having me. This is my passion. I love speaking on behalf of the veteran and military community. And also to, education is the key, right? If I can provide any additional information that would help somebody, help just one more military or veteran in our communities become a homeowner, then we're winning. So I'm really excited about this. This presentation, I believe, really brings home some strategy around how you help military and veterans win more. One of the big issues we see a lot as I travel the country, and really it's been like this for, I would say, better part of a decade. And I'm sure people on this call right now who have worked with military and veterans would probably say the same, that no matter what market, it always seems it's a tough sell to get veterans across the line with our real estate partners. It just always is. And I believe that now we are at a pivot point in this, in our community, in our industry, where we need to start changing our mindset on how we work with our agents when we're representing our military and veterans. We need to be more advocates than we do loan officers when working with them. So I'm excited about this presentation. We're going to do some really cool stuff at the end. There's some review questions. My goal is to give away a bunch of books, and then also to any if we have any military veterans on this call. So, Bryan, you want me to start sharing now?
Yeah, absolutely.
Okay.
Absolutely, Bryan. Thank you.
All right. Yep. Give me 1 second here. I'm gonna share my screen. Boom. Here we go. Share. Let's see. We will start from the beginning. All right. Well, welcome to what I call Realtor Serving the Underserved. So, the great news about this presentation is that, take notes, you guys are all going to get copies of this. So, what I call you guys are force multipliers. Okay. You're our force multipliers. You're going to be able to take this presentation, remove my picture, obviously, unless you don't want to, unless you want them to yell at me, and then use this content to go out and teach your real estate partners on how to work with military and veterans. So I'm basically giving you the keys to the car after this presentation to take this into market and start educating folks. So to all my active duty military veterans and military spouses, thank you for your service. If we have any military veterans or spouses on this call, please send your information in the text chat or send it to Bryan, because I have a gift for you that I want to send to you. Obviously, I won't be able to send it till Monday, but please provide either contact information where I can reach out to you personally, or your information where I can send you a little gift on behalf of myself, the military lending team, and Loan Depot executives. Okay. All right. So one thing I like to do is I like to start off with the what if and the one thing. Okay. So what if I told you that there was a repeatable playbook that you could use to help veterans win in any market? So the best part about this is, but right now we're in a pretty low inventory competitive market, but I think because of the way the industry and our real estate partners view VA and military, is that we have to take an approach in regardless of what market. So to me, for veterans, unfortunately, because of the misinformation, they're always in a competitive market. They're always competing to get their, basically their contract approved, accepted by the sellers, right? And then the one thing I want everybody to walk away with is that the VA home loan, while it is a benefit, it is a competitive strategy for our veteran customers. Okay. It is a competitive strategy for our veteran customers. Okay. We don't want our VA customers to just compete anymore. We need them to start winning. Okay. So just start thinking about the concept of strategy throughout this presentation. Again, Jeff did a great job of my background. Been in the mortgage industry for 23 years, military for 21, and I've spent pretty much better part of a decade traveling the country and doing and representing military and veterans nationally through education and community engagement. So I'm in a very unique position because I still serve in the military today. So I have 1 foot in the military and 1 foot in our industry. So I do get to hear quite often the challenges that my sailors have during the home ownership process, and how our active duty has their own set of unique challenges as they navigate the dream of home ownership relocating across the country. And that's what I like about this presentation for those that actually, that do get an opportunity to work with active duty military folks that might be relocating into your market. This strategy is how you win for them. So I'm really excited to share this information. All right, so we can't talk VA unless we do a little bit of a history lesson on the VA home loan benefit. Okay, so the benefit was created in 1944 and it was part of the GI Bill. A lot of people don't know that, but the VA home loan's been around for over 80 years. Okay, it was created. What was great was it was created in lieu of just providing cash alternatives to folks who return from war. They felt that becoming homeowners, owning property, owning land was the best way to get them reacclimated back into the civilian life. Cool part is I always like to show this stuff. Maximum loan amount was, not, I mean, the maximum amount was limited to 50% of the loan amount. So it's not to exceed 2,000, but over 4,000. Obviously, the price of homes have changed significantly since 1944. Maximum term was 20 years. But here's the best part. I always tell people when we talk about historically low rates, look at the rate that they had for VA benefits back in 1944. It was 4%. It was 4%. Obviously, the benefit has dramatically changed over the course of 80 years. Has gotten a lot, just way better, obviously. In the beginning, it expired. There was a lot of changes that went through the history of the VA home loan benefit through World War II, Korea, all that stuff, to where they've nestled in nicely today. But it has expanded over the last 80 years, and that's why you see now, more than ever, more veterans taking advantage of it. Okay, so the VA home loan, this is another thing that's a lot of confusion. We as lenders are the ones who provide the financing. For some reason, our counterparts out in the industry believe that the VA lends money, and you're going to find some veterans, especially veterans that have served in the 70s and 80s. Most of those think that the VA actually lends money when it's us, the lender. The VA does provide a private guarantee, which is a form of insurance. And so this is one of those great things where you can explain to your partners that because of that insurance, the credit box gets significantly bigger, right? Which allows underwriters and us as lenders to technically put more people in homes that may or may not have had blemishes or roadblocks or issues along the way, right? So you don't have to be perfect to get a VA loan, which is great. Okay, we're going to go over the basics here. So the basics that are listed on these next couple slides are the normal ones we always hear, I did not knows, from not only our customers, our veteran customers, our mortgage professionals, you and I, and then also to our realtor community. You could probably live on a lunch and learn just with this stuff with your real estate partners. Okay. So one of the big ones, can use it more than once. Most veterans have no idea that they can use this benefit more than one time. We used to get a lot where vets would say, hey, I don't want to use my VA benefit because I want to use it for my forever home, assuming that it's a one-time deal, which is not the case. A veteran can have more than one VA loan at a time. Again, that's another piece of misinformation. If that wasn't the case, active duty folks would barely be able to ever use a VA home loan benefit, right? Because they relocate every 3 to 4 years. So that capability of having more than one is great, and it helps them big time. It's an entitlement game at that point, right? So if somebody goes and moves, moves into Manhattan and buys somehow, gets into a condo in Manhattan for $3 million, they're obviously going to have no entitlement left. So the ability for them to have more than one would be a null and void. But somebody who lived somewhere else where they spent $300,000 or $400,000 on their initial house, they would have entitlement left to purchase another one. So it comes to a numbers game, but you can. This is another big one. A veteran and a non-vet can purchase a home together. It's called a joint loan. We see this is gaining more and more steam over the last 4 or 5 years, as our veterans are starting to age out a little bit. So we're seeing veterans buying houses with their sons and daughters. So we're seeing multiple families moving into a house. And then we also see veterans buying houses with their significant other, but just not married. So there's a process in place for that. One thing I always say when it comes to vet, non-vet is that you have to set the expectation that it's going to take longer to underwrite because these types of loans have to go to VA for prior approval, right? So rule of thumb on joint loans, if you ever cross this path, is you want to give yourself an extra 10 business days to get this done. Okay. VA loans can be assumed. Obviously, this is a hot thing right now because rates were so low in 20 and 21. The assumption ability for a VA loan is great. The buyers beware on this is if anybody can assume a VA loan, you don't have to be a vet. So, but if I'm a vet and Bryan is not a vet and he assumes my loan, I lose my entitlement that's still connected to that loan. So there is a consequence to doing that. But assumptions have become extremely popular. And you might have already experienced it already. One of the other things too about assumptions is typically assumptions are handled out of the servicing department. So there's that whole extra level of communication that needs to be placed on an assumption. Okay. The number one benefit, 100% financing. So VA does not have a max loan, right? So a lot of people, that's another misinformation. You can, after the Blue Water Navy Act that came in 2020, they removed all loan limits. So if somebody can afford and the lender's willing to lend a $10 million VA loan, they can. Which is great. That was probably one of the most significant changes in the history of the VA home loan benefit was removing the conventional loan limit cap from VA. And that happened in 2020, on January 2020. Rates on VA loans are typically lower than FHA and conventional. I think everybody on here probably already knows that. But VA rates tend to be typically lower. One of the big things too is on purchase transactions, we can use 4% for seller concessions to pay off debt. I love that feature. I can't tell you how many times we've been able to save deals with VA purchases or get deals across the finish line by exercising the seller concession feature to pay off debt so they can meet residual income. No private mortgage insurance. This is a big one. It does have a funding fee, I think, but one key thing to know that about 7 out of every 10 veterans that are discharging from the military today are receiving some form of disability. So the gap is getting smaller with the folks who don't. It's actually more common to find people who are exempt than non-exempt. Veterans with the service-connected disability obviously are exempt from the funding fee, which is really good. And VA does not have a minimum FICO requirement. So again, when we say as a community, the VA won't do something, just be very mindful that sometimes when you say that, you're really highlighting what an overlay is, not really what VA will or will not do. We see that kind of a lot often when we see customers come in who say, hey, I tried VA, but VA turned me down. And it comes out that, it really the VA won't turn down anything. So just be very mindful of that. Active duty reserve and guard, they do qualify for the VA home loan benefit that happened in the late 90s. So if you're working with veterans from the 80s and 90s, our 50s and 60-year-old veterans a lot of them may probably do not know that they even are entitled to the benefit. We see that a lot with that age bracket because they were in the reserves, and at that time, reservists were not entitled to the VA home loan benefit. Great part is now they've even expanded the National Guard to where Title 32. So your state has a pretty big National Guard presence. And the National Guard, if they're ever on Title 32 orders now, that counts towards them earning the VA home loan benefit. So that's really cool. They expanded it a couple years ago for Title 32, which really opened the door, and it's retroactive as well. It really opened the door for a lot of National Guard folks to become entitled. Active duty service members who've earned a Purple Heart are now exempt from the funding fee. Believe it or not, we have a lot. I mean, obviously, post 9/11, the war in Afghanistan, all that stuff. We have a lot of active duty military members who have a Purple Heart. They are automatically exempt from the funding fee. And then a big one is surviving spouses. I see a lot of that. The good news about VA with surviving spouses is they take everything. You don't have to try to figure anything out. If you have a spouse who said that their loved one was, died due to a service connected disability, or they're receiving some form of pension based off of their death, you can actually just send that into VA when you order the COE, and they'll do the checking for you, right? So I always say, when in doubt, send a VA. That's a great rule of thumb. All right, here we go. Another major benefit too is our streamline options after the customer's in it. This is what I always talk about, the benefit of getting into the ecosystem after that. Super easy. Anybody on here that's done an Earl knows. Super easy program. And with the way the rates are today, you get somebody in, you're probably going to end up doing an Earl for them 2 or 3 times over the next 5 to 7 years, right? You can do cash out up to 100%. And then the big one, especially when you get into economic issues, etc., is the VA has a staff dedicated to assisting veterans who become delinquent on their loans. Okay. We all know that the way our industry has been built is customers tend to not be able to get support until they're 90 days past due. If you have anybody, whether they, now is a good example, with the government shutdown going down for 45 days, we had a lot of people who were government employees, active duty military folks who were kind of freaking out a little bit, right? Not knowing if they're going to be able to make their payments, et cetera, what the future holds. This is where that dedicated resource for them can help big time. At least give them a peace of mind to know that they got somebody in their corner in the event their servicer doesn't. Okay. This is the fun part here. This is the data. This is kind of the I did not know that when it comes to veterans and military. I call this perception and reality. And, in real estate and in mortgage, perception often drives a lot of decisions. But I always tell people the perception is not the reality, and this is why. Because a perceived VA buyer versus an actual VA buyer, perception with our real estate partners is that they have poor credit, no assets, no income, and obviously no down payment. When the reality is the national average FICO for a veteran in the last year has been 718, $65,000 in average assets, 10,000 average income a month, and in most cases, a $95,000 average down payment when one is given, right? And this is info straight from VA. Okay. So 15% of VA buyers choose to put money down, not because they need to, but because they have to, which I think a lot of people don't even pay attention to that. But just look at those numbers. If those numbers scream conventional customer, right? So if you look at, and it's been trending this way for about pretty much since 2016. In 2016, the average FICO for a veteran finally exceeded 700, and it's only been chipping away year after year since. I like to attest this to, um, in the active duty military space, as we create more veterans, as people transition off of active duty, there's a big difference. And I've seen this full circle in 22 years of serving. Financial management and family readiness is a priority number one in the military. Back when I first started serving in the mid to late 90s, um, I laugh at it now, but most of us only cared about when we were getting paid to go to the bar and have cocktails and drink and party and stuff, as 21-year-olds and stuff and 19-year-olds. The game has changed significantly since post 9/11. Um, you know, we have realized that it's hard to maintain a security clearance with poor credit and bad financial decisions. And what the military has learned the hard way is the number one issue for people to do bad things in the military against the military is typically financially related, right? So a big push on financial management resources, et cetera, has been pushed into the military over the last 22, 23 years. Significantly, I've seen it in the Navy. We have financial specialists on every base. And people are not allowed, the problem is this. Hey, if you can't maintain a security clearance, you can't maintain a job, which means you can't maintain your career in the military. And that's pretty simple, cut straight. So I think that has a lot to do with this. But the great news about this information here, just this little snippet, I guarantee your partners out in the real estate community probably have no idea because they think it's something totally different. Another thing too, perception versus reality. Most our real estate partners out there think, and even our veterans think that if they have a larger down payment, they don't have as many conditions, or it'll be a lot easier to get the loan approved. If I go conventional, it might be a safer deal. We hear this a lot. Well, why would I take VA or anybody else when I got a cash offer? And then the one that drives me absolutely nuts, as an advocate myself, is that no down payment somehow defines the customer as broke and or must have bad credit. When reality is, the loan conditions are loan conditions. Doesn't matter what your down payment is. You know what I mean? The underwriter's the one who figured that out. And sometimes your down payment size is based off of your credit risk. So while it might look great for a seller to say, I want the person who put 20% down, they probably don't know that, hey, conventional borrowers can have crappy credit too, right? It's not, it's that just because they're 20% down and doing a conventional loan doesn't mean that they got perfect credit. And also, too, what I also find funny is the cash offer thing. Cash offers fall out just like everybody else does. And there's an interesting stat that 5 to 15% of cash offers fall through at any given time. So they're not even considered a 100% safe bet, right? And the way I look and the way I'm trying to get, I would love for everybody on this call to start looking at VA is that 100% financing benefit is is strategic, right? It's not a necessity. It's strategic in most cases, which is how we need to start focusing on this stuff. Okay. So we're all gas, no brakes on this. So let's keep going. So the first two things, if you want to work with more military and veterans, we get these questions all the time, right? So if I want to work with more military and veterans, what do I do? Well, the simple answer to this, believe it or not, because I've seen this play out over 20 years, is to work with more veterans. It comes down to one simple question. Did you serve in the military? You have a large demographic of veterans who literally will not self-identify, right? And typically when they're going through these processes, and you don't ask, they're not telling. So, and most veterans, like I said before, have no idea about the VA home loan benefit even today. Now, I would say we've gotten better as a military. As I transitioned off of my deployments, I've seen, our transition classes, now they actually speak about the VA home loan benefit, but that took 21 years for me to actually see that in a transition class. And like we said before, the Guard and Reserve veterans, they have no idea. They have no idea that they're even entitled to it. And most of the time, when you talk to a vet and you say, "Oh, I didn't know you were in the military. What'd you do?" They'll say, "Oh, I was just a reservist." So for some weird reason, we have a veteran group that just already thinks, "Oh, I was just a reservist. This doesn't count for me," right? So we have to ask these questions. And for the most, to bring it up because they didn't even know that. I mean, because they don't even know where to start. So simple question. We see it all the time. We see it even in our world, in our ecosystem, where we'll have veterans come and we'll talk to them and they're like, "Hey, I would like to do a refi." And you're like, "Oh, okay, great. Why don't you do an IRRRL?" "Well, I'm in an FHA loan." And you're like, "Well, how'd that happen?" "Well, I didn't try to do a VA loan and they didn't ask me if I served." So just that one simple question, you'd be surprised how many people that are in your sphere, or what I call your power base, that actually have served in the military. And then number two, if you want to work with more vets, you gotta know how to obtain and how to read one of these things. So the certificate of eligibility, if you don't know what that is, we call it the COE. You probably call it the COE. You've probably heard the name COE, but it is literally the golden ticket. You don't have anything without this. So when we work with somebody that says they're a veteran, the first thing we need to do is to obtain this. Okay. What I've seen in the past, and this is where kind of people, especially the reserve community or National Guard community, gets frustrated, is when someone asks if they served, they said yes, they automatically go into putting the loan in as a VA loan, right? They make the request for their certificate of eligibility, or they don't, and then only for that person to find out 3 weeks later that their service does not entitle them to the VA home loan benefit. And now you have the, you know, what I call the moving truck scenario, where you have a family in a moving truck sitting in front of a house waiting on keys, right? So this is the golden ticket. And you, being able to navigate this quickly and efficiently for your veterans will be a game changer for you. And also, too, this is how you save deals. This is how you save deals. And we're going to check this out real quick. So if you haven't seen one, this is what this golden ticket looks like. Okay. In any good government fashion, it is the most boring looking document you'd ever seen. But it is a very important document and it says a lot. So if you notice on there, you don't have to fight anybody on the funding fee piece because it tells you whether the customer is exempt or not. Okay. This is what I call a clean one. This is what you like to see when you get one. Okay. You don't want to see a lot of stuff on these. This one, notice here, funding fee, Mr. Stand Down, is exempt. Now, when you see exemption status, the beautiful thing, VA finally started putting the VA disability monthly compensation on this document. So this document now is a one-stop shop for you. You don't have to go and ask for award letters. You don't have to go and ask the customer to dig up their disability paperwork because it's right there for you. So if you look under funding fee, it says under conditions, they're exempt from the funding fee due to receipt of service-connected disability compensation of $31.82. Okay. So one-stop shop document right here for you on that. Here's one that, while on the surface, you're like, "Oh my God, this is not good," which it's not. Nobody wants to see a foreclosure on a COE. However, the good news is, based on how small that foreclosure is, they still have plenty of entitlement to go buy another house, right? So this is why I said understanding COEs, knowing how to read a COE, because they might have been turned down by other lenders 50 times based on this, just because someone looks at it and goes, "Oh, nope, your entitlement's done," right? We can't do anything, which is not the case. And then this is the ultimate one. This is the one I was telling you before about understanding service, all that good stuff. Because most of the time, when you're dealing with someone in the guard and or reserves, this is what's going to happen. Your team, your processing team, or whoever controls going into LGY and ordering this, if it doesn't come back automatic, this is what you're going to get. So the VA does a really good job of outlining exactly what you need for whatever type of customer, reserve, National Guard, etc. And getting with your customer and having them provide this documentation is very important early and often, because what you don't want is having to deal with that 2 weeks before closing. Okay. The good news is for everybody on this call, if you ever run into this scenario and you don't know how to navigate it, my email address that you can use is on the very last slide of this. You can always reach out to me. I'm more than happy to, work on triage and help you navigate this process. Because this is where the magic happens. You get deals like this from other folks that are turned down, and you can make this happen because you know how to navigate this document request piece. You'll have loyal customers for life and referral partners. All right, so just real quick, we're going to take a pause. We went through the history, we went through the basics, some very important data, and then the two most important things I think when you're trying to increase your business in the VA space, asking the question and understanding the most important document that they need, which is the COE. And if you ever need help, I won't tell anybody, but I am Batman when it comes to VA. So you need help, I'm going to give you my email address. You can put up the bat signal or the VA bat signal, and I'm there. Okay. So this is my favorite part right here. This is the things that, we put together on a purchase transaction for our veterans, and they're going to win way more than they're going to lose. Okay. So first and foremost, 100% financing. Okay. 100% financing equals liquidity. Yes, there are some vets who need 100% financing because they have no money. And that, by all accounts, according to the data, is kind of the exception to the rule these days, right? But that's the same case on FHA, same case on conventional. But for the majority, 100% financing equals liquidity. So our buyers can keep more cash on their hand, right? And what I like about it too is because it gives them more maneuverability in any type of market, right? So if I keep my cash on keep cash on hand, no matter how the appraisal shakes out, repairs shake out, or if by some chance somebody else thinks this house is just as cool as me and my wife does, I can go to battle to walk away. Because I will tell you right now that if I was going to buy a house and my wife picked that house out, it doesn't matter if there's one other family or 10 other families, come hell or high water, she's going to want that house. So every housing thing for me would be ultra competitive. So keeping my liquidity would provide me more options to be able to navigate how, if I'm up against other people, etc. Right. So what I ask is that people need to stop looking at 100% financing as a negative and start looking at it as a positive. Because if I have two customers, one person who's got 20% down, let's say we'll use $1 million for an example. So they've got 200 grand into the transaction with the lender. But then I got customer B who's doing 100% financing, but he's got his 20% or she's got her 20% in a bank account of 200 grand. Who's got more flexibility during the transaction? Clearly the veteran, right? Because the conventional borrower's got 20 grand into the transaction already just to get the financing from us. So the veteran has more maneuverability, whether the appraisal comes in low or maybe even it's a, multi-offer situation. The veteran is going to be able to have more options than the conventional borrower. Number two, pre-underwritten VA approvals. No more of this, pre-qual stuff, right? Pre-underwritten VA approvals. This is the secret weapon when competing against markets that, agents talk about a lot of cash offers. Okay. So pre-underwritten VA approval is very important because now it does a couple things. One, it basically condenses the turn time on this because you only are required at that point to have an appraisal and title, right? So when you go in and compete for a home, you're just as good as a cash offer because that cash is good, right? That cash is good. And what you've done is you've basically condensed now instead of having to do 30, 31 days, which is another, pushback from the real estate community. Now you've said, hey, listen, I can close whenever you need to, because all I need is an appraisal and all I need is title, and we're good to go. It keeps it fast, it keeps it clean, and it also shows how serious the client is to want to buy the house, right? We designed our process because of active duty. Okay. And I always say if you can design your initiatives to support the active duty, veterans always win. Active duty military, when they're coming in on a relocation, only have 10 days of house hunting leave. So they, within 10 days, have to figure out whether they're renting or buying. And most of the time they come in, they have a pre-qual, maybe a pre-qual, who knows? Come in, find a house, they come back, call everybody, their agent puts in an offer, and then they start working with their lender. Offers get kicked back. They probably don't get accepted. Maybe they do, maybe they don't. Most likely they don't. And then they got to go rent. So this now changes that game for that person where they go into house hunting leave, they show up into a market, and they basically got something that's just as good as a cash offer. They know their max, they know how much they can offer, and their stuff is good to go. All they need is title and appraisal. So this is a game changer for the military. Strong earnest money deposit. So we go back to the 100% financing piece, right? So by having 100% financing and having liquidity, this provides the opportunity for our veteran to really give what matters most to a seller, right? Which is a strong earnest money deposit. I think sellers and agents get this mixed up, right? Because if I'm a seller, do I really care if somebody's putting 20% down? Or do I care that they actually gave me a real earnest money deposit to show me how serious they are at buying this house, right? And I think because they look at one and the same when they're totally different, this is where we come in and are like, hey, 100% financing provides liquidity. Our customer can provide a legit earnest money deposit to show your your client, the seller, how serious we are at buying this. They have the reserves to do it. And it kind of changes a little bit of the playing field for our veteran. So earnest money deposit. Buyer paid commission. So VA went and changed this a while back ago, especially after the NAR ruling, and now allows veterans to pay up to 2% buyer side commission. Okay. Now, we haven't seen a lot of this. It has not popped up. But the cool part is understanding how to navigate it in case it does. And also, too, again, having money and not having your money tied up in a down payment provides you to leverage all these tools to make yourself look more attractive to a seller, right? So if I'm picking up buyer side commission, I got a strong earnest money deposit, all this stuff. When I submit my offer, that starts to look really attractive to a seller, right? They're not, at this point, they're real, and I got a VA, pre-underwritten approval. They're not really too concerned anymore about VA at this point, right? And so the buyer side commission, while it might not be a big thing in a market yet, I do believe if the event you have to pull this, you can. And this is the one I hear a lot. You see a lot of this go on, especially on the conventional side, which is the escalation clause, right? There is nothing in the handbook, nothing at VA that does not allow a veteran to enforce an escalation clause to keep them in the game on this house, right? And this is what 100% financing allows them to do. If they're going to be in a competitive environment on a house, they can establish an escalation clause right out the gate saying, I'm willing to go over 50 grand or whatever it is based on their reserves. I can go over this, put in an escalation clause, again, showing the seller how serious they are about this house, right? But a lot of people don't know you can do this because most folks assume with VA that you can't do these things, which couldn't be further from the truth. And then another one, the appraisal gap clause. So yes, you have what we call, oh my gosh, I'm brain burning here. Sorry, everybody. So this right here is why 100% financing continues to win. Okay. Because now you can do an appraisal gap clause and it becomes a powerful tool now more than ever, actually, because we're starting to see more and more homes not kind of praising out like they were a couple years ago. And also, too, this helps soften the blow because we get a lot of pushback from our, industry partners in real estate that talk about the escape clause, right? Everybody's heard it. The escape clause allows, a veteran to get out of the transaction. But when you read the escape clause, it even says in there that the veteran can, with their own funds, cover the gap. It says it in the escape clause. The verbiage is already built in. So, yes, while the veteran cannot not do the escape clause, they can't waive it. What they can do is do an appraisal gap clause to then show the seller that, hey, I am prepared to go over the appraised value to purchase this house if necessary, which is a huge, again, signal back to the seller. And then it also to basically eliminates any misinformation or negative, negative feelings towards the VA appraisal. So what does a properly drafted appraisal gap clause look like? Here you go. Here's a great example. So buyer acknowledges that the VA escape clause remains in effect and is not waived. However, should the VA notice of value come in or below contract price, buyer is willing and able to contribute up to X. So kind of broke it down for you here so you have it. But again, the appraisal gap clause is a nice little tool to have in a competitive environment that will hopefully eliminate any negative feelings towards the VA escape clause. And remember, like I said before, in the escape clause, in the verbiage, it does state that the veteran can cover the gap. All right. And then number 7, the VA appraisal. So this probably is one of the biggest hangups that I feel that we deal with when it comes to helping veterans use their benefit more, helping veterans achieve the dream of home ownership is the basically the negative attitude toward the VA appraisal. And I'm probably putting that mildly. They have definitely gotten a bad rap over the years. But let's talk about the facts. I mean, the reality is the VA appraisal is the best appraisal. It's the best process that we have in the industry, right? You have 3 chances for success with the VA appraisal. You don't have that with conventional or FHA, right? Yeah, you might have a reconsideration of value process, but the way the VA has it set up, you get 3 opportunities to try to get the value right. And at no harm to the appraiser, right? So with conventional and FHA, if you ask for reconsideration, it's going to be tough to get that appraiser to change their mind because it's a negative look on them. Another thing about VA is national averages with VA appraisals is about 7 business days. Now, the delays actually happen prior to and after receipt of the appraiser. So when you hear, appraisals take too long, etc., normally that's because of some of the things we're going to talk about below with Tidewater and ROV. But fundamentally, when the home is in good shape and great and all that stuff, it's from time of accepting of the order to the time of turning it back into VA, is around 7 business days. So, which is huge. Most people think it takes longer. VA appraisals can, take longer than conventional, and in some cases that's true, but systemically there are 7 business days. Also, too, a lot of everybody I talk with, when we talk about appraisals coming in low, they say they feel like VA appraisals come in low all the time. When statistically speaking, 92.5% of all VA appraisals come in at or above contract price. So that's a huge number. And less than 20% of VA appraisals have NPR issues, which again is another piece of misinformation because most people think every time a VA appraiser goes out to a house that they physically turn into a home inspector. I used to hear horror stories about, them changing into a home inspector and just nitpicking properties, but the data doesn't really support that theory anymore. Um, you know, you get second and third chances. So Tidewater is that early alert to low value. Then you got your reconsideration of value, which is the actual formal process if Tidewater is unsuccessful. And a cool stat that always turns heads when we're doing this presentation for realtors is that, yes, 92.5 come in at or above. So you got a very small group that don't. And even out of that small group, 54% of ROVs have a positive result. So even when Tidewater failed with the appraiser, we send it off to VA to be reviewed by a VA staff appraiser. And nationally, there's a 54% success rate with that, which is pretty awesome. And conventional FHA don't have that. So, and I bring all this up because we get so much pushback from the markets on, the VA appraisal when really theoretically, and if you look at the way the appraisals are done, it is the best process that we have in the industry. And so just to kind of run through, I'm not sure, most people don't really understand, and this is why I like to highlight why sometimes these VA appraisals can take longer because of the way the process actually works. But obviously they're ordered through the VA portal, assigned to an appraiser. Appraiser accepts the order, and then they have their SLAs that they got to deliver the appraisal back. Some markets are 7, some markets are 10. It really just depends on how many appraisers they have and then how rural the area is. But once it's done, it's uploaded back into the portal. The problem is, and this is where you get out of the 7 to 10-day turn times, is when it comes in, it's going to come in low and the appraiser initiates Tidewater. Okay. Once they initiate Tidewater, that's VA's second chance. This is where you have 48 hours. All the realtors, lender can participate to provide additional comps to support the value. Okay. Now, typically you win here. This is why they can go off of the 92.5%, come in at or above, is because Tidewater is successful a lot of the times. They have to review and respond quickly to keep the momentum in the transaction going. And then if by some chance Tidewater is unsuccessful, and yes, that does happen, now you have your built-in third chance, which is our ROV process. So how ROVs work, it's not a lender process per se. The ROV process is actually a veteran-driven process. What we're doing as lenders is we are actually sending in the request on the veteran's behalf. But it's a great process because it goes to a VA staff appraiser who has no personal emotional ties to the transaction, right? Doesn't know the appraiser personally, doesn't know us in lending personally. So they can just look at it, look at the comps, and then decide if, yes, we can get there or no, we can't. And we win that as a industry 54% of the time. Now, What happens though is it can take up to 5 business days when you get to that ROV process, right? So, and Tidewater can take 2 days. So now we're already at 7 additional days. So when we say about 7 business days, when we get into that, 7.5% of loans that don't meet or exceed value, now we're running into an extra 5 business days at minimum, to have staff appraisers looking at it. And we've seen some too where the staff appraiser has kicked it back and we've went back for a second level review. And that has worked sometimes. So, but again, this is where the process for the appraisal can take a little bit longer. But everybody in the transaction already knows we're trying to get the value. So ROV comes back unsuccessful. This is where we talked about before, about the appraisal gap clause, right? So the veteran can, cover the gap with their own verifiable funds, which is great. So when you get into those low inventory markets and the value's just not there, but the house is competitive and people want to buy it, this is where hopefully they got the appraisal gap clause. If they don't, but they got the reserves to do it, they can. And VA obviously supports it and allows it. Okay. So I got some good news for everybody on this call. So we used to go through kind of what our VA appraiser is actually looking for, and we talk about MPRs. So for those that don't know, minimum property requirements, this is typically the biggest heartache for our real estate partners out in the marketplace. When talking about VA, this is where they have, really dug their heels in, where the old school VA appraisers have gone out and just nitpicked the properties, etc. Well, I was speaking with VA's chief appraiser last week, and they are waiting on signature, but they have revamped the whole MPR appraisal piece for VA appraisals. So instead of asking for repairs and all that stuff, now VA appraisers are just going to highlight appraiser concerns. And that's a game changer for our industry. Because what that does effectively is allows us as lenders to make decisions based on risk. So I'm waiting. I'm hoping I can get a early preview of what this is going to look like. But it completely changes the way MPRs are looked at, viewed, and how lenders can navigate it. So I'm really excited about it. It should be now that the government's back in business, launched by January 1. So it is a game changer for all of us. But an NPR in general used to be safe, sound, and sanitary. So I'm sure everybody here knows you'd get stuff for missing stairs, banisters, exposed electrical, any kind of foundational issues, etc. We already know about the septic and sewage stuff. But one of the key things that I think everybody needs to take away about NPRs in general, and no matter what direction VA ends up going with it, because NPRs are still going to be a part of it, is the veteran can always request an NPR waiver. Can always request it. Okay. NPR waivers get approved at about a 40 to 45% clip last time I checked with VA. And the reason why some of them don't get approved is because they will not approve any NPR that has a direct impact on safety. They can live with certain things, but there's some hard stops in there. But like I've said before, when it comes to VA, when in doubt, ask VA, because their number one thing is to make sure the veteran, gets to the home that they want, if it's not at the detriment of the veteran. So they're the biggest advocate for them. And so I always like to, because you never know. I mean, they'll make exceptions on all kinds of things, right? Whether it's condo approvals, NPR waivers, the list goes on. You just need to give them a shot to do that. Okay. So we're going to go over some review questions. So in the chat, please answer quickly. We're not going to spend much time on each question, but what we're going to do is for those that answer and participate in this Q&A, right here, this little review question section, we're going to raffle off some awesome books that I have to some of you folks. You will not be disappointed out of either one of these two books, but we're going to pull names from the groups that reply to these questions. Okay, here we go. So, true or false, the VA loan is just a benefit, not a competitive strategy. So, true or false, the VA loan is just a benefit, not a competitive strategy. See, I think somebody replied. Okay. False. The VA loan is more than just a benefit, is a competitive strategy when leveraged in the right way for our VA buyers to win. Okay. Number two, what is the average FICO score of VA buyers nationwide according to VA? So we just had that way up earlier. What was the average FICO score that we had on there? Okay. There we go. 718. So remember, 718 average FICO score, 65,000 average assets. Okay, here we go. True or false? 20% down conventional loan equals perfect credit and no loan conditions. So true or false? Tell you what, Lori's on fire right now.
She is, yes.
I mean, I'll just say that. She's on fire right now. Okay. False. As we discussed earlier, right? As we discussed earlier, most sellers believe, obviously that's real. Conventional borrowers can have FICO scores as low as 580 to 620. So, and remember, loan conditions come from underwriters, not from the down payment amount. All right. Complete the sentence. 100% financing preserves what? Which gives the buyer more room to maneuver and win. Lori? Liquidity. Did I beat her? No, she already. Yep, she got it. That's awesome. All right. Yep, liquidity. So preserves liquidity, gives VA buyers more options and room to maneuver in any market. Okay, here we go. Next question. True or false? A pre-underwritten VA approval, the two main things left in order to close are appraisal and title. True or false? True. A pre-underwritten VA approval only needs an appraisal and title to close. When done up front, we know our buyers can leverage fast, clean closings, which is what we want. Okay. True or false? A down payment shows commitment to the seller. A down payment shows commitment to the seller. Remember, down payment is for, there we go. False. Real skin in the game that signals commitment to the seller is earnest money deposit. Down payments for the lender, not the seller. Okay, true or false? It is against VA policy for a buyer to pay for buyer side commissions on a real estate transaction. True or false? False. Good job. Yes, a VA buyer can pay for real estate commissions. And there's the actual document. So if anybody wants to give themselves a good reading, there's the VA circular that outlined the new policy regarding the NAR settlement changes. So, got it. True or false? VA loans cannot use escalation clauses. VA loans cannot use. Oh, I already hit the button. Sorry. It's false. Save you trouble. Beat you, Lori. Beat you. Yes, a VA buyer can absolutely use escalation clauses. So if someone says VA can't do an escalation clause, that is a red flag because it's not a rule. All right, I won't hit the button this time. Promise. All right, true or false? You cannot do an appraisal gap clause on a VA purchase due to the escape clause. True or false? False. You can absolutely use an appraisal gap clause. It's actually even the verbiage itself is built into the escape clause. So, and I gave you a great example of what a appraisal gap clause should look like on the previous slides that you guys can use. All right, finish the statement. Blank percent of all VA appraisals come in at or above contract price. What's our number? Got it. 92.5. So remember, 92.5% of all VA appraisals come in at or above contract price. True or false? A veteran can waive minor repairs. I think we just talked about this, or pay for them out of pocket. I think we just talked about this. NPRs. True. That's another myth, right? A veteran can request for an NPR waiver, and a veteran can also pay for minor repairs too, pay for them out of their pocket. That's not ideal, obviously, because stuff still could happen where they don't take the home. But in a competitive environment with low inventory, if the veteran really wants the house, yes, they can do that. All right, that's mission complete right there. So here's an email address that you can reach me anytime. Keep it simple, military@loandepot.com. Also, too, I will share, let's see, where's the, in the chat? There's my cell phone number. If you're ever in a situation where you got a question with VA, please reach out. I am here to help. I am a forever resource for you. I've been offering this up for 13, 14 years. I still get calls from not only loan officers, but agents and loan officers on a three-way call. It doesn't matter. So please use me if you have anything. And no, there's no question too small or no scenario too big. I'm here to help. So that's all I got.
Bryan, this was amazing. I cannot thank you enough for this awesome information. I've been 33 years in this business and I learned about 10 new things. I'm so and thank you so much for your service. Very appreciated. And so I don't know if anybody else on the chat has any other questions, but I just truly cannot thank you enough. This was fantastic. I will definitely be sharing this with about 100 people after this call.